Hey everyone, welcome back to the channel, and thank you so much for clicking on this video. If you've been following my content for a while, you already know how deeply I am fascinated by the explosive growth of artificial intelligence and the massive investment opportunities emerging around it. And today, I want to share something that has been dominating my research, my watch lists, and honestly my mind over the past several weeks. I've been diving into the AI sector with full focus, analyzing dozens of companies, tracking trends, reviewing financials, and identifying where the real long-term potential is forming. After all that digging, I've uncovered 3 incredibly compelling AI penny stocks, all trading under just $1 per share, that I believe deserve your full attention. Now, before you think this is just more hype surrounding AI, hear me out. These aren't speculative ideas with no product, no revenue, or no direction. These are real technology companies with real AI applications, actual commercial traction, and legitimate growth catalysts. The reason their stock prices are sitting this low has far more to do with broader market sentiment and institutional focus on mega-cap AI giants, not the quality of their technology. Today I'm going to walk you through each company, what makes their AI breakthrough so unique, and why I believe they present rare, high-potential opportunities for investors who understand the long game in AI. So stick with me as we dive into 3 under $4 AI plays that could deliver surprisingly strong returns. Let us begin by breaking down why artificial intelligence remains one of the most strategically powerful sectors for long-term investors. We are witnessing a technological shift that mirrors the early days of cloud computing, mobile internet, and even the original .com era, but with far stronger real-world adoption. AI is no longer theoretical. It is embedded into cybersecurity, drug discovery, supply chain optimization, finance, defense, and industrial automation. Analysts now project AI-driven markets to expand into multi-trillion-dollar ecosystems, creating some of the decade's most asymmetric investment opportunities. However, here's the dynamic most investors overlook. While mega-cap giants dominate the headlines, the true innovation often emerges from smaller, specialized AI firms solving narrow, high-value problems. These companies typically operate under the radar, developing real revenue models, building defensible intellectual property, and securing strategic partnerships. And because they lack institutional attention, their valuations often sit at levels that dramatically undervalue their long-term potential. Our first opportunity fits that profile perfectly. This company operates at the intersection of AI and precision medicine, using machine learning to accelerate the development of oncology therapeutics. Trading around $3.54 per share, it has experienced volatility. But that volatility masks extraordinary clinical progress. Its proprietary AI engine analyzes over 100 billion oncologist-specific data points using more than 200 advanced algorithms designed to predict drug performance, therapeutic response, and treatment pathways. This platform recently achieved a major milestone. Its lead therapeutic candidate met all primary endpoints in a Phase 1A trial with a 48% clinical benefit rate. That kind of early-stage validation is exceptionally rare in small-cap biotech. Beyond therapeutics, the company is also commercializing to AI-powered research platforms that provide predictive modeling capabilities to external partners. With accuracy rates exceeding 86% for treatment response forecasting and new, FDA-aligned guidance for pediatric applications, the company is building a strong foundation for clinical and commercial expansion. Analysts now project price targets near $20, indicating 400% plus potential upside if the company continues executing. Our second opportunity operates in one of the fastest-growing branches of applied AI, real-time video intelligence, surveillance analytics, and sensor-based data processing. While consumer AI products receive most of the hype, the real enterprise demand comes from government agencies, defense departments, and large-scale industrial operators who require high accuracy. AI systems capable of handling large volumes of unstructured data. This company sits squarely in that niche, providing advanced AI-driven surveillance and security infrastructure across multiple government sectors. Trading at roughly $3.71 per share, the company has displayed significant commercial traction. Revenue for 2024 reached $23.1 million, representing a remarkable 87% year-over-year increase. More importantly, the company's flagship AI platform, an enterprise-scale system designed to analyze thousands of hours of raw video and sensor output, has now been adopted across several major US agencies. The Department of Defense recently awarded the company a key contract to deploy its platform for global digital evidence management. Additional agreements with the Department of Homeland Security and the Department of Justice reinforce the platform value in mission-critical environments where accuracy, reliability, and data security cannot be compromised. Inside the business model, the company continues strengthening its fundamentals. It recorded a 71% gross margin last quarter, demonstrating the scalability of AI-driven software offerings. The company has also eliminated its debt, secured new strategic partnerships, and attracted substantial insider buying, strong indicators of internal confidence in future valuation growth. Given global trends toward border security, defense modernization, and national security infrastructure, demand for AI-powered surveillance solutions is expected to accelerate. Analysts covering the stock, maintained by ratings with strong upside projections. For investors seeking exposure to government-driven AI adoption, this company represents a compelling blend of revenue momentum, contract stability, and expanding market relevance. Our third opportunity focuses on one of the most transformative future applications of AI, autonomous delivery networks powered by robotics and aerial drones. While autonomous vehicles capture mainstream attention, smaller autonomous systems designed for logistics, healthcare delivery, last-mile transportation, and industrial services are rapidly becoming commercially viable. This company is positioned at the forefront of that shift. It's trading at around $3.68 per share. The company recently made its NASDAQ debut and is entering a pivotal transition from development to commercialization, backed by a $40 million capital raise. The company is rapidly scaling operations and expanding deployment of its autonomous robotic and drone delivery systems. One of its most notable achievements is a live hospital delivery program launched at Hancock Health, where autonomous robots now transport medical packages across facilities, reducing labor strain, accelerating delivery times, and providing proof of concept for broader healthcare adoption. Additional partnerships in India, the US, and multiple commercial sectors further validate the company's operational capabilities. The company holds 9 US patents protecting its autonomous arrival point technology, creating strong intellectual property barriers for competitors. Although revenue remains modest, management has demonstrated strong conviction by authorizing $10 million Australian share repurchase program. Alongside CEO insider Buyinja's strong indicator, they believe the stock is significantly undervalued. Future catalysts include expanding regulatory approval for drone operations, commercial scaling of last-mile delivery systems, and partner integrations with global mobility companies. Analysts project potential returns of 200% plus if commercialization accelerates as expected. Together, these three companies represent unique AI opportunities at different stages of technological deployment. One is validating AI-driven drug discovery. Another is scaling government-grade surveillance intelligence. The third is transforming physical logistics through autonomous delivery infrastructure. Each one has the potential to deliver asymmetric returns as AI adoption expands across industries. Now, before we wrap up, I need to speak honestly about the risks involved here, because understanding the downside is just as important as recognizing the potential upside. Investing in AI-driven companies, especially ones trading under $4, comes with substantial uncertainty. Technologies can take longer than expected to reach commercial adoption. Clinical programs, no matter how promising early data appears, can fail in later stages. Government contracts that seem locked in can be scaled back, paused, or redirected due to shifting budgets or political priorities. And emerging autonomous delivery networks might face regulatory delays or slower market uptake than anticipated. The AI biotech company is still operating at a loss and requires consistent capital to fund clinical trials. The surveillance intelligence company is deeply tied to government spending cycles, which can fluctuate. And the autonomous delivery company is still in early deployment stages, meaning revenue is minimal and execution is everything. These stocks could remain volatile, even decline further. In the worst-case scenario, you could lose your entire investment. That's why position sizing matters more than anything. Never commit more money to a speculative AI stock than you can afford to see go to zero. These positions should represent high upside, high-risk components of a diversified investment strategy, not the core of a portfolio. I strongly encourage you to take the time to research each of these companies independently.
Wow.
Look deeper into the clinical pipeline, the contract structures, the commercialization timelines, the cash runway, and the regulatory landscape. Use this breakdown as your starting point, not your final decision. Having a plan is non-negotiable. Know your exit levels, understand your risk tolerance, and avoid emotional trades driven by hype or fear. The investors who succeed in emerging technologies are the ones who pair optimism with discipline. If this analysis helped you think more clearly about AI opportunities, I'd love to hear your thoughts. Drop a comment below. Tell me which of these companies you're watching, or whether you're bullish on niche AI innovators. And if you found real value here, make sure to hit that like button and subscribe to the channel. Truly helps me produce more deep dive investment content for you. Thanks for watching. Remember, informed decisions create the strongest portfolios. Do your research, stay patient, and never invest more than you're prepared to lose. I'll see you in the next video.